Look at that, would you? Record nominal silver weekly price close in fiat US dollars accomplished. And what is this about surging lease rates? Well, it looks like London is now running into silver 1,000 ounce bar shortages. How do we know this? Because London silver lease rates exploded this week to levels not seen since Warren Buffett's Berkshire Hathaway raided the silver market back in early 1998 to complete their then 129 million ounce silver bullion position. Well, for the world silver markets in 2025, this isn't 1998, and no, it's not 1980, and no, it's not some pipsqueak 2011 silver bull market either. RICO, suave, short silver commercial bank desks are unlikely to come in to rescue shorts this time around. Because this time, the world is running into an ongoing silver supply deficit for now some 5 years with no end in sight, to the tune of nearly negative 800 million ounces in outsized silver demand, outstripping silver supplies ongoing in these 2020s. And the institutional money managing momentum longs are out there threatening to come plowing into this silver market as we eventually do blow beyond 50 per troy ounce. I find it deeply ironic in this week where the scapegoated Hunt brothers' names got called out yet again with half-truth tales galore that 747 cargo jets are reportedly being loaded with 1,000 ounce silver bars to be whisked off to London to stem and or slow the silver squeeze tides. This week, the London spot price, or cash price seen here, had to climb above the COMEX futures prices to better incentivize 1,000 ounce silver bars to begin flying and or floating back to London's tight, near no available silver float market to stem demands. No, it's not a full backwardation in the silver market yet, but we are perhaps going there in time. It would be a fun scandal if it does. 1 month silver lease rates popped this week, moving from 7%, 11% to 20% to as high as nearly 40% from data postings in the public arena that London keeps too opaque in a market where the world depends on such data to make buy-sell choices day in, day out. To see London have a silver shortage scandal explode into the public arena and consciousness as we are now near 50 an ounce is rich indeed. Nope, London, let's have you say it in this classic Bart Simpson meme once again. The spot silver price in fiat US dollar terms hit a new nominal record price high yesterday, Thursday, October 9, 2025, of $51.22 an ounce. Let me say that one more time. Let it sink in, silver bulls. The spot silver price in fiat US dollar terms hit a new nominal record price high yesterday, Thursday, October 9, 2025, of $51.22 a troy ounce. We saw some unsecured Indian silver ETFs have to halt new investment inflows this week, given local bar shortages in their markets. Not surprising, Indians are getting very bullish silver, looking for a catch-up rally versus gold. Surely they're asking London for some. Meanwhile, it seems London is beginning to attract some 1,000 ounce silver bars from the record high COMEX warehouse piles as they begin going back to London with silver lease rates now being so high and spot prices in London now being above mini COMEX futures prices. Well, that makes sense for the arbitrage profits. Might this be the near-term silver warehouse holding high for the COMEX? Maybe the all-timer? And is the eventual silver sucking sound out of the COMEX and a silver bullion bull market mania about to get much louder, with not only industrial silver demands ongoing, but oncoming store value investment demands threatening to kick this bullion bull market into overdrive? We'll be monitoring, of course, so subscribe, you bullion bulls out there. In such a historic week for silver, it was well timed for me to get to drive over to the SD Bullion Depository and Pickpack Ship headquarters and spend some time with two executives from the Royal Canadian Mint. In the following conversation, we touched on spiking lease rates and how that affects their bullion minting business. And I want to personally thank the RCM Chief Commercial Officer, Tom Frogat, and the Bullion Sales Managing Director, Lauren Whitmore, for taking their time to sit down with me and you all for the next 10 minutes as we run through some of this week's headlines and how and why the Royal Canadian Mint has been able to garner so much more worldwide bullion buy-side market share the world over.
Hello, it's James Anderson here with SD Bullion. Just so you know, this is being recorded October 7th, Tuesday at noon Eastern Time. I am here, the pleasure of being here with two executives from the Royal Canadian Mint. We're going to be releasing this in the next few days. So we're going to be talking about prescient up-to-date information, stuff that even is happening today and this morning in the silver market especially. Thank you for being here, first and foremost. I want to pay some respect to the Royal Canadian Mint because thus far in my career in this industry, you guys have been one of the best in terms of products that you produce, in terms of being flexible and creating products with multivariate, obviously we have a whole slew of different types of products that are gorgeous, and you guys do really, really great work. I want to highlight the fact that you obviously are now at the point where you're leading in a lot of these years in terms of in global sovereign mints, in bullion coin production. Can you go through what's happened in the 2020s? You guys did pass the U.S. Mint in the first few years of this decade. I'd like to get the general audience to understand how big of an achievement that is.
Sure, I can start with that. But we're really proud to say that for 2021, 2022, we really prioritized being a reliable provider, and we made sure we had our production up to speed to make sure we could fulfill as much of the demand as possible. Mm-hmm. And that's what really allowed us to be number one in terms of sovereign mint gold coins and sovereign mint silver bullion coins. So, and over that full COVID period in the first half of this decade, in aggregate, we were also number one, and we get our data from industry sources as well. So that was really a function of us making sure that we were able to scale production and try and meet as much demand as possible. One of the learnings from that was we recognized how important capacity was. So we invested in additional capacity, which we're just rolling out for both gold and silver by investing capital in a new silver blanking line, because silver blanks are always the choke point in the silver bullion business. And so we made sure that the next time we have a big spike like that, we're even more well prepared to respond to the demand.
Yeah, and I'm just looking at your data. I researched, almost 38 million ounces in the COVID era 2021. That is pretty impressive. So kudos to you guys. Obviously in gold you led, I think in 2022, in terms of overall ounces, almost 1.5 million ounces of gold sold. I don't think our customers totally understand that it's not just the domestic United States, which is probably one of your largest customers, but also I've traveled internationally. I've seen your market share in Asia firsthand in the early 2010s. Asians really, really love your products. I mean, I'm talking from Hong Kong to Singapore. You could probably speak to that a little bit, I would assume.
Yeah, and we're active in all of those markets, and I really think it's impossible to be number one in the world if you're not participating around the world in all of the important bullion markets. So we've spent many years trying to cultivate a following and make sure we cater to all of those markets. So that was a conscious choice and something that makes us much more resilient. Sometimes there's demand in one place when there isn't in another. So we want to make sure that we're diversifying our portfolio of markets to make sure that we're a resilient mint.
That makes total sense. I want to give you guys a little hat tip too. Last night at dinner, I have to be honest about it. I used to think the fourth nine was kind of a marketing gimmick because I used to just break out the calculator and do the calculation and say, it's like $4 in gold the difference, and silver it's just copper nickel cents. It's not even that big a deal. But you had mentioned to me that the fourth nine is essential for industrial silver demand, and that to me is actually a differentiator that kind of opens my eyes because we are in a bull market, it seems, in silver, driven by industrial demand. So if you could speak to that a little bit, obviously you have some expertise in that with the fourth nine.
Want to talk about that?
Yeah, sure. We feel it's a differentiator, and we get great feedback from our customers around the world, having that fourth nine being that extra bit of silver. Mm-hmm. But in the future, we're seeing more and more demand on the industrial side, so there's going to be competing efforts, and we're shoring up our supply to ensure we have our access to the 4 nines as well as the industrial use, and we're hearing there's pent-up demand for the industrial use.
Yeah, it's obviously growing so much, I think more so than people ever realized it would in the early 2020s, and that's really what's seemingly pushing the squeeze going on in silver. And this morning we're hearing facts from London that lease rates have gotten into double-digit levels, almost 12% this morning. Obviously, platinum lease rates has been a problem for a little bit. That's been super high, but silver going up to that height can cause some trouble. I would imagine, just in terms of your day-to-day operations, how does that work? Probably your customers, they don't understand completely how lease rates affect your business models.
Yeah, well, they certainly do, because there is a period of time, that you need to transform raw silver into a finished product, and you always have to have inventories to make sure you're able to supply the market. So that's just another cost of doing business. And as those rates elevate, it just increases the cost of producing what we produce. So we've taken measures to make sure we're extra sharp in terms of managing our inventory positions, and it's really a necessity. We always like to have a lot of inventory, but it's really not practical with these elevated lease rates. And we also understand this affects our customers and their holding costs, their appetite, and how they aggressively pursue buybacks and all of that. So I think it has really a ripple effect across the industry.
Right. So there's a few more questions. I opened it up on my Twitter handle at James Henry, and I asked my followers as well as the Silver Squeeze chat if they had questions for you guys, and I have a few. Some of them we'll see how that goes. I'm going to ask verbatim. Let's see how it goes. We have Precious Metals Bug. He says, awesome. Thanks for the opportunity, James. My number one question is the Royal Canadian Mint curtailing the production of retail silver products in order to produce as much London Good delivery bars as possible for the LBMA and or COMEX, but mostly LBMA?
The short answer is no. I mean, we always feel an obligation to supply that market, as I mentioned earlier, and they really don't compete that strongly. Again, we do the good delivery bars are 3 nines. We have 4 nines as a separate stream of supply for the minted product. So they're really 2 separate streams of production.
Okay. They're asking a question about demographics, who their buyers are. How is that shifting? Income levels, ethnic nationality, and age. Obviously, you guys are the mint, right? And so your customers are essentially us. Like, we'll come to you, we get products from you, and then we sell it to the retail market. Any other info you have perhaps on that? Just give a kind of granular understanding as to kind of how that works a little bit. I mean, just some clue so the retail investor understands better.
Yeah, and as you've alluded to, we're not selling to the end customer on the bullion side. So, our views are more kind of a consolidation of anecdotes, essentially. And so when we talk to our customers, we are hearing that, there's a younger demographic that's starting to be more interested in gold and silver, and I think you're starting to hear about precious metals in the mainstream media, which has not happened for a many number of years, and I think that's introducing a lot of new investors into the game as well. So that's really had an impact. We've also seen the tastes of the customers, shift a little bit, whether it's because of traditional, ethnic purchasing, or whether it's an age band or whatever it might be, but. As one example, we've expanded our gold bar product lines because there is an emerging and growing sector of our end customer base that's interested in having bars. So we introduced a 10, 50, and 100 gram gold bar into the marketplace. Mm-hmm. We've got special themes like Diwali and lunar themes. So, and again, those product innovations are a direct reflection of where we're hearing demand from our distributors, mm-hmm. which in turn reflects the changing nature of the customer bases that they're servicing.
Makes sense.
And just to build on that, we also have another business line which we call numismatics, and it's more about collectible precious metals. And what we've seen lately is more of a shift in a collector-investor, mm-hmm. or an investor-collector. So we're starting to see that there's interest on the investment side from the collectors, which typically it was more about the theme before, but now it's a little bit more about the investment.
Mm-hmm. Yeah, no, it makes sense. As the price goes higher, eventually people with their budget, they really want something that means something to them in terms of look and feel, and so something a little more collectible as opposed to just simply stacking ounces, which can get a little boring after a while.
Exactly.
Yeah, and conventional wisdom has been that Venn diagram between collectors and investors didn't overlap very much. Mm-hmm. And I think that's been challenged recently as we mm-hmm. figure, I like physical metal as an investment, but if I'm going to have a hobby, why wouldn't it be that hobby? And I can actually see the value in that hobby as well. So I think it's challenged some of our assumptions in the past.
Yeah, I just personally speaking, there's certain pieces that it's just you won't sell them. You're going to hand them down to your generation forward. There's other ones that of course you'll sell when they get overvalued or when you feel like it's time to move somewhere else. Mm-hmm. A couple more questions and then we'll be done here. He's asking, Jason M's asking about sourcing locations for silver. How are those sources weighed in terms of percentages? I've heard that a large majority is coming from U.S. wholesalers. I think there's some confusion about, but you guys can speak to the various sourcing apparatus here.
Yeah, in terms of purchasing bullion products and backdates, I mean that's the business that SD and other distributors are really in. So we're our feedstock on our refinery tends to be from mines primarily, and a little bit of scrap, and that the complexion of that hasn't really changed a lot. Right. So we don't really play so much in that space.
I would imagine mostly from Latin America, South America, and then some from Europe.
I mean, on the gold mine side, we're substantially filling our refinery with Canadian mined gold. We have the advantage of being in Canada, and the mines in Canada are heavily skewed to gold. On the silver side, we'll source from other sources like Latin America indirectly as well.
Yeah, Mexico, Peru, they'd be pretty big
Mexico,
players.
Exactly.
Yeah. And then the final thing is people just asking about supply and demand. People are a little bit worried because they're starting to see the market being very tight, and I think they just want to make sure that there'll be available product in the future for them. So they want to know how it's holding up, how our inventories, et cetera, and those types of things. So can you speak to it, I guess, this week, October 7th, Tuesday, 2025, how are things holding up?
Yeah, we have pretty broad and robust supply chains and well-established relationships, and we're, I know we make sure that all of our suppliers, are, have a good relationship with us. They know what our requirements are. We have constant communication. So when we want to get metal, we've been able to get metal. As we talked about earlier, the price and the lease cost to carry the metal is something that's a bit more volatile, but it's something we're managing through. But from a supply perspective, I don't really think we have any concerns at the moment.
No, and I was in the plant the other day, and we're full on with the silver SMLs.
Great.
In production.
Well, I really do want to say, first and foremost, thus far in my career in the bullion industry, you guys have been doing really great work. So keep it up. I'm super enthused about what you guys are coming up with and looking forward to more releases as they come along.
Great. Thank you, James.
Yep, thank you.
So let's quickly review where we are in this historic weekly bullion market update. The over-levered COMEX threw 1.1 billion ounces of paper silver contracts at prices today. Yeah, that's the annual silver supply trading in one session alone. That's how desperate the silver shorts are at the moment. But yet, we still got a $50 an ounce silver price close, and Silver WrestleMania is kicking off in London 2025, likely to leak into 2026. We also got a nominal 4,000 ounce gold price, which continues, one that fiat financialized normies can't seem to understand still. And the spot gold silver ratio quietly broke below the nominal 80 level this week, signaling just how much rocket fuel is still in the tank for the bullion bull market mania phase to come. Hey, I know I'm entertained, and I'm betting you are too. So smash the like. We'll be right back with this U.S. silver refineries saying no more 90% silver coins or silverware melt news, and some longer-term precious metals charts, and even a few shorter-term takes on what's happening in the monetary precious metals markets at the moment. Stick around. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Yeah, and I think since we've launched the SD Bullion IRA program, we've even gotten more insight into this industry.
Right.
And you start to see the email, the unorganization, and things make sense of why things take so long. When you use the traditional three, separate entity model, nobody's doing checks and balances with each other.
And like you said, there's horror stories now that that people are reaching out hey, the depository says 4 years ago they didn't get this inventory, and it's this is crazy, guys. Compared to our facility, everything, literally every inch of this facility is under camera.
I hope you enjoyed this short clip from my recent conversation with SD Bullion founder Dr. Tyler Wall. If you're interested in opening a gold or silver retirement account, then this video is a must-see. The insights and strategies that we reveal have helped SD Bullion customers save hundreds of thousands, if not millions of dollars inside their gold and silver retirement accounts. After $5 billion in transactions with more than 400,000 customers, I assure you, this video might be the most important thing you do for your gold and silver future. Visit ira.sdbullion.com/video today. There, you'll be able to gain full access to the entire interview, and you'll also be able to watch more short clips from our conversation. That's ira.sdbullion.com/video. I hope to see you there.
The spot silver and gold markets traded bullishly on the week. The spot silver price ended the week at $50.11 an ounce bid, and the spot gold price closed the week at $4,012 an ounce bid. Yes, we still have a historically high gold-silver ratio of 80, which was this week's close. U.S. silver refinery industry news this week. Various reports all over the internet of major silver refineries stating no more 90% constitutional silver coin melts and or 90% silverware melts for now. We always knew there would be another oncoming wave of weak-handed silver sellers as we approach the nominal $50 an ounce price high level. It seems the neglected, too far consolidated U.S. silver refining industry cannot keep up with the brick-and-mortar 90% silver sellbacks that have been coming their way. Now, don't act like we didn't warn you when these days were coming. Way back in December 2019, nearly 6 years ago, here's what we told you.
It really doesn't matter how much industrial silver we have pilfered away because recycling was not worth the monetary return. When it finally becomes worthwhile to recycle silver, it will become worthwhile to do so globally. The world silver refining industry does not have the capacity to meet another major global silver melt akin to the one that happened in the late 70s and early 1980s. If you've been paying attention to the silver bullion and silver refining industries over the last few years, you're probably well aware of the consolidations and bankruptcies that have occurred. Once LBMA approved gold and silver bullion bar refineries, all of a sudden quickly became bankrupt, either alleged and or prosecuted blood gold silver refiners. Names such as Ohio Precious Metals, Elemental, Republic Metals, all once large silver gold refineries, they're now gone. The largest remaining LBMA-approved gold-silver refinery in North America recently got called out in a New York Times expose showed on the FX television channel. The TV show asserts that North America's largest gold and silver refinery has been selling alleged blood gold illegally wildcat mined in countries around the Amazon rainforest, such as Colombia, Venezuela, Brazil, Peru, and Ecuador. Multinational corporations named in this blood gold expose include Apple, Ford, Samsung, and Tiffany's jewelry. You know, the overpriced one with the blue box. So we can add up all the world's sterling silverware and pure silver jewelry piles or other uneasily exchangeable silver combined at the moment. What I'm trying to get across to you is that what's past this prelude. And just quickly walking down memory lane tells silver bullion buyers interested in selling into the silver mania that's to come, they should always consider the form of the silver bullion they stack.
Back to the present week, Citi's Max Layton went on Bloomberg and hammered home their increasingly bullish thesis for silver moving forward. Have a listen to his measured take.
When you look at gold's price action today, gold futures are lower for the first time it feels like in about 5 or 6 days. The dollar is stronger, and there seems to be a shift in tone on the U.S. dollar. Can the dollar and gold continue to move higher at the same time if there is this sea change and more conviction in dollar strength going forward?
Well, that's a great question. I think that speaks to our preference. So we prefer silver at the moment over gold. Around a week and a half ago, we upgraded our silver forecast to $55 an ounce and said, as we get up to 4,000, we think silver is going to really start to outperform. And I think we're just seeing the early signs of that. And part of that is that silver is a bit more of a growthy commodity. So we're seeing, I wouldn't say a rotation out of gold, we're seeing buying of both, but we are seeing more of the white metals being demanded, as well as copper and aluminium just in recent weeks. And that speaks to the prospect of what equity markets, what credit markets are kind of telling you, which is that growth will probably end up being fine over the next 12 to 18 months.
Okay, I like the way that you tied it back to the macro outlook. Silver, we know, is an industrial metal too. So in addition to being a precious metal and kind of an investment asset, it plays a big role in the industrialization of our economy. What is the breakdown for demand when it comes to silver right now? Is it kind of like a 50-50 split between industrial use and investment, or is it more lopsided, more tilting towards an investment?
Sure. Yeah, I mean, in the last couple of years, solar demand has taken a much larger share, and overall industrial has moved to around 80% of the silver market. Now, at the same time as that industrial demand has been quite strong, you've added investor demand to that over the last 6 to 9 months in particular. And, the market is, I mentioned that gold is small compared to household wealth, even a fraction of household wealth. Silver is a fraction of the gold market. It is a tiny little 4 40, even at today's kind of 50-year record high price, this is a $50 billion market, which is less than a tenth of the gold annual flow. So it's a tiny little market. You've got investors competing against industrial users, and you're seeing the results of that with the price action.
Very quickly, Max, before I let you go, do you have a price forecast for gold and silver right now?
Yeah, so silver's 55 short term, and it's quite plausible you get there very short term in the next couple of weeks. It's also exposed to potential headlines towards the end of this month of APEC meeting pre-APEC meeting between President Trump and President Xi on the growth side. And on the gold side, we have been essentially recommending clients be long with a trailing stop because it's quite hard to put a value on exactly what it's worth.
Well, let me help you out on some of that, Max. You see, I got these fresh long-term charts from the Grandmaster Precious Metals chart maker down under, Mr. Nick Lyard of Gold Charts R Us, who has this pretty great gold and silver price history look spanning U.S. financial history. In every major bullion bull market, when silver doesn't get artificially rigged low like it did in the 1930s Great Depression, well, typically silver eventually plays catch-up to gold, and we might be stumbling into one of those moments right around the corner. Platinum is still relatively cheap on a historical basis versus gold, so I'd consider some of that given it's also in an ongoing market deficit and China continues buying it hand over fist. Goldbug Sachs is now calling for near $5,000 an ounce gold later next year, 2026. If the Australian website Discovery Alert's forecast of central banks buying 1,300 tons of gold reserves this year in 2025 is accurate, remember, that would be in the face of $3,000 an ounce gold all year. Well, that would be another record gold bullion haul for government balance sheets, adding some 41.8 million ounces of gold over bonds, the main driver. They also know the record debt and unfunded liability math of the Western world. Now, delusional AI-bloated U.S. stock bulls out there should probably keep in mind that thus far in the 21st century, you've lost to gold bullion, and that it will likely continue to be that way as the nominal S&P 500 and spot gold price eventually reach 1-to-1 parity, as has happened more often than not in our nation's financial history. Silver in Swiss francs still needs to nearly double nominally just to meet its old 1980 price high in then much more powerful Swiss francs. So yes, silver bullion is still relatively cheap for now. And it's a similar story over in Japan, but Bruce Ikemizu is slamming the table for Japanese precious metals bulls, and judging by their ETF inflows, their unsecured ETF inflows, well, the Japanese are listening in the land of the rising sun and adding to those ETFs. Now, I personally continue acquiring, and I suggest if you are also in the market looking for more bullion, give our deals page a look this weekend as 90% U.S. silver quarters are on sale at spot, and small gold and silver bars are priced at razor-thin premiums above spot. I just personally saw those 5-ounce Johnson Matthey bars. They're sweet. Visit www.sdbullion.com/deals for those offerings and more. That will be all for this week's SD Bullion Market Update. And as always, to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.